Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets and talking about a couple of trade ideas that I'm currently monitoring. Um, we can start off here with the S&P 500, which, as you can see from these one-day candlesticks, has been pretty much unmoved now for a little over a week. Like we've been stuck between 4,100 to the downside and 4,160 to the upside, pretty much swinging either side of this 21-day moving average. Now, what I'm thinking for this week is, while this really is a very very thin range, so there is a possibility that we could break it to either side. But I'm thinking that this market this week is probably going to lack the oomph to get much further beyond the current trading range. So if we can break above here, we're not going to break above the 4,000, 200 level, for example. Or, if we fall, we're not going to go below 4,050. Why am I saying that? Well, I mean, let's just have a quick look at the calendar. Like we just had retail sales data come out, which was on the soft side, but not too different to expectations. Well, I guess the headline was a fairly big miss on expectations. Um, we've got some more data coming out this week. Philly Fed Manufacturing Index after the very ugly Empire State Manufacturing Index data that we had. But the thing is, we already know that US manufacturing is struggling. Really, the main thing out of the US that's going to update on the economic sort of central bank narrative is Fed Chair Powell's remarks on Friday. Now, everyone's thinking that the Fed's going to pause its interest rate hikes now. That is very much expected. But if Powell does add further confidence to that message, then potentially you could see an extension of rate cut bets in the remainder of the year. Depends what his sort of tone on the outlook for the economy and the outlook for inflation is. But that could potentially get things moving a little bit. But ultimately, I would want to try and play this range that we're in, 4,050 to sort of just below 4,200. With the Nasdaq, it continues to gradually crawl higher. I don't see any reason for this crawl higher to stop for now. I think you want to be looking at upwards trend lines, the various upwards trend lines that are potentially in play that you could potentially be talking about. Maybe that one, and I think I prefer the current ones. Potentially looking just in the very short term anyway to buy any dip back towards this trend line perhaps, and the 21-day moving average around 13,150. If risk sentiment is holding up okay this week, that is, you'd have to have a little bit of a dip, but then you could jump in on that. Regarding the DXY, I'm thinking probably going to remain stuck within recent ranges as well. We had this slight little push higher, with the dollar not wanting to basically break out to fresh yearly lows. But we've run into a lot of resistance, 50-day moving average, 100-day moving average here. So I'd be, just like the S&P 500, looking to play this range really as I can. Regarding gold, kind of similar story to the Nasdaq. I think this gradual sort of crawl higher can still potentially be in play. What sort of trend lines can we draw up here? Something along this lines. I think the crawl higher can be in play, so it might be a decent area to be getting back involved now. Although obviously Powell is a little bit more hawkish because remember the Fed has been pushing back against the idea of rate cuts later this year, which markets are very much pricing. So if they start to get priced out, that could result in a hawkish market reaction, which could result in gold slipping. So just something to bear in mind. But for now, this 2,000 level is sort of acting as support, having acted as resistance previously, or that's roughly what we're looking at. In fact, there's actually a bit of a descending triangle going on here. Yeah, That's a little bit concerning because these typically break to the downside. So potentially you might want to wait for this to break lower, break higher again, wait for the confirmation that this descending triangle was broken, and then you could potentially target some of these recent lows, around 50, $60 lower than we currently are. Finally, quick look at oil, continues to remain stuck below this downtrend. I mean, unless there's a big positive economic surprise out of one of these major economies like the US, which we're not going to get this week because we don't really have important enough data coming out, then you'd expect this downtrend's probably going to remain in play. Although if it does break, you'd expect a retest of this support term resistance in the 74 area. But yeah, I mean, one of the things why I'm expecting range-bound conditions to remain in like the S&P 500 and the DXY mainly is because we just don't have, apart from Fed, there's just not that much that's really going to move the needle this week. Next week, you know, you got these flash PMIs out of the US, which will be important. Fed meetings will be important. Core PC price index data, which obviously very important as well. So next week potentially a little bit busier, and then the week after obviously goes into the first week of June. So you get all the jobs data, and the ISM data, and the JOLTS data, consumer confidence data. So yeah, we're kind of potentially in a bit of a lull this week before things pick up a little bit in the next 2 weeks, which is why for now I'm just thinking things just looking at ranges really. But yeah, guys, hope you all enjoyed this video. Hope you all found it informative, and I will see you all in the next one.